You're basically exchanging active income. That's what the IRS has for landlords. It's not passive; it's active income, or it's active work. And you're moving into basically becoming a shareholder in a portfolio of properties.
Exactly. You're going to become a limited partner or a shareholder in this partnership. If you've heard of a REIT, you can kind of think of it like a REIT or UPREITs.
Alrighty, folks, I am going to introduce to you a concept that I will now refer to as a secret weapon for real estate investors. All of you have undoubtedly heard about a 1031 exchange. You know my journey with one rental at a time, where we went from 8 to 80 units, all via 1031 exchanges. But you know what, folks? We have a secret weapon called the 721 exchange that no one talks about, but everyone should know about. And we're going to have this conversation today with Ari from Flock Homes. Help us understand, Ari, why a 721 exchange is a secret weapon that we all need to know about.
Yeah. Michael, thanks so much for having me. Just to start, really grateful to be on this. I know you have an awesome audience of listeners and folks in your community. So really psyched to share a little bit more about what we're building. Just to start, so I think everyone here, I know obviously you guys are really well versed with the 1031. Just a reminder, it's kind of like a real estate loophole. It's been around for decades. It actually used to apply to art and airplanes and other asset classes. And just for everyone here, the way it works, obviously you sell an asset and then you have to identify and then ultimately roll your proceeds through a qualified intermediary into another real estate asset class. So great for sort of tax deferral, optimizing your investment strategy. But it really falls short in two ways. For certain people, again, for many of your clients, it's a great option, or people in your community, it's a great option. We find in conversations with our clientele and people in our community, it falls short with number one, if you're trying to retire from being a landlord. So if you at the end of the day, you still go into owning other types of real estate. Now you can go into a triple net lease, you can 1031 a bunch of single families into one apartment building, but at the end of the day, it's still your name on title, you're still liable, and you still own real estate. Yep. So I think that is one of the sort of pitfalls or drawbacks of the 1031. The second thing is they're really complicated to do. 45-day identification period, 180-day. You got to be a really active sort of, and again, if you can pull it off and you're full time on this, it's awesome, right? But if you're trying to get out of owning real estate and to get tax deferral and ongoing, and so at Flock, we're building the retirement solution for landlords. We'll get more into the business and our company later, but in short, let's just talk about the 721 to start. Mm-hmm. Short, the 721 exchange, it's a part of the tax code. It's been around for a very long time. And it says, Michael, you own an asset. Let's say it's a single family rental, or maybe it's a multifamily building. Maybe it's actually some stocks, literally, it's not just a real estate loophole. It applies to a lot of different asset classes. And let's say you've got $1 million worth of real estate. Okay. And what the 721 exchange allows you to do is exchange your $1 million worth of real estate and get back shares in a partnership or a fund. So you go from owning 3 single family rentals, let's say worth $1 million, they're in your name and title. You exchange those 3 assets, that $1 million of real estate, tax free or tax deferred, for shares in this partnership. So You no longer own the individual assets anymore. You now own shares in this partnership. And you're now a shareholder in this fund or partnership, meaning you get all the ongoing appreciation, income, depreciation. You get all the benefits of owning your real estate without any of the burdens. You have no liability. You're not responsible for anything anymore. It's basically like you own shares in a REIT or shares in a syndicate, in a partnership or something like that. So fully passive. And of course, you defer the taxes.
Yeah. It's really funny. I mean, I've heard of the 721 exchange a couple of times, and I've been doing this 20 some years. It does solve a couple of unique problems, right? One of the stories I wrote about in my second book, 15 Conversations with Real Estate Millionaires, and it's actually the chapter I've told people that was most impactful to me, was an 80-year-old young woman who was kind of piecing out her portfolio because we don't get out of this without passing on, and nobody in her family wanted to be a landlord. So what she was doing is she was basically sucking it up and paying the taxes. And I don't know this for certain, but I feel very confidently in saying that she didn't even know about a 721 exchange. Why does a 1031 exchange get all the press in real estate circles and not a 721 exchange? Because again, it's not mentioned a lot.
Yeah, it's a great question. I think at the core of it, like if you owned 100 million, if your family owned $100 million, hotel or office building in Midtown in Manhattan, you would have heard about this. It's very common for large, very, very large commercial real estate transactions. As REITs were formed and got very popular in the 80s or 90s, this was a very popular mechanism. But it's until now, no one has really offered it to the mom and pop, to the individual American who owns rentals. And the reason for that is it's really complicated to do. Like a 1031, it's complicated, but it's not like that complicated, right?
It's defined, right? There's a box. Yeah,
exactly. And like it may be it may be hard work for you to do, but like doing a 721 exchange, figuring out how to explain this to moms and pops, to the millions of Americans out there, like it's just everyone in large institutional real estate has sort of been like, I don't want to deal with that.
Yeah.
And our view and our company's view and part of our mission in doing this, we see like this massive opportunity because there are so many people out there who need this. So we were like, let's put in the investments, let's build out the tech and the processes to do this for all the individual Americans who would benefit from this, just like all the super wealthy, ultra high net worth families have done over the last couple decades.
Yeah, we're going to dig into that some more, but let's answer one of the big questions up front already. Where if somebody is hearing this, they think 721 exchange, they don't know anything about it. Where do we send them to learn more? Do we send them to Flock Homes, or where do we send them?
Yeah, so flockhomes.com, that's our homepage. That's the best place to check it out. There's other firms out there who do other, there's a publicly traded self-storage REIT called National Storage Affiliates, coincidentally also based in Colorado. They utilize the UPREIT transaction a lot. There's a lot of groups out there that do this. We're the first ones. If you go to National Storage Affiliates website, scroll down, go to their investor relations thing. They're a big publicly traded sleepy REIT, Right. But if you own self-storage, like that'd be a great option. We know some other folks in the short-term rental space that are trying this. So check out our website, flockhomes.com. And even if you don't own a single family rental, reach out to our team. We'll have ideas of other folks in the asset class you can talk to. It's pretty common in mobile homes. We're working on some stuff in multifamily now. So reach out to the team and we'll connect you to the right people.
Very cool. So let me kind of set up what I'm kind of piecing together with the 721 exchange and the avatar, if you will, this would be right. So this could be for a tired landlord, somebody who's sitting on an asset that they want to get out. I mean, I just got off a call with my school community, and one of the guys owns a property in Florida. It's inside an HOA. They're getting all these special assessments and all of this, and deals are hard to find today. He's like, do I just sell it? Do I 1031 exchange? One of the options might be, if he's in maintenance mode, is a 721 exchange, because again, he can get out, he can move the equity, he become a shareholder, and I'll call it a fund. I don't know if that's the right vernacular, but it's also, it's a lot more liquid. It gets away from the special assessments, and there's income, right?
Yeah, exactly. So the way it works, just to be in plain English, is again, that guy owns his asset. Let's just say it's worth $500K for easy numbers.
Sure.
Let's say he has no debt on it, just for really simple numbers. But he's got a really low tax basis, right? He's owned for 30 years. He depreciated it to zero, and so his alternative is like paid depreciation capture, cap gains,
no good,
the broker, which he's not going to do it. Like so exactly. He would roll his asset into Flock. We price it. We take a fair amount. We our business model, and I think what's cool about exchanges in general is we're not trying to like buy this thing low and flip it high. We're not like an iBuyer. We're not a flipper. We're just trying to create a fair system for everyone. So we give you a fair price. We never negotiate on that. We've got all our clients who are already in Flock, the hundreds of people. We've now done this with, we're about to hit 700 homes. I'll give you more of the story later, but
Nice.
yeah, it's amazing. We've worked with hundreds of just amazing people. And again, just that sort of avatar, as you described it, we think of them as sort of two types of folks. The first one, retiring landlord, they may own one property and they just accidentally, own their primary. Then they moved to the next one. They thought they wanted to build an empire, and then they were like, life got in the way,
Yeah.
The other one, we've worked with folks who who put 200 plus homes in. Another portfolio owner with 70 homes, 30 homes. We're doing a 50 home deal right now. So larger, sort of like very much their full-time job. And it's usually the problem comes down to one of sort of two. It's like, I'm tired. I don't want to be liable. I don't want to deal with this anymore. The other thing that we see a lot is folks who were super hands-on investors, like you and a lot of your community are, and they're like, I'm full-time. I've got my crew. I'm generating good returns. I know how to do. And now it's like, I'm in a different stage of my life. So we have a lot of folks, they stay in real estate. They're just like, I find development a lot more fun. And I'm like a deal guy or a deal gal, but I don't really like the whole like collecting rent and focusing on margins and tenants and toilets and all that stuff. I want to focus on where I think I have edge and where I find a lot more fun, which is this development stuff, or hanging out with my grandkids or whatever that is. This portfolio that I already have, I just want to put it on autopilot and get peace of mind from this institutional caliber fund where, my team of crazy, really hardworking people are just going day in, day out. And so I just want to go passive and put it on autopilot.
I like it. Well, let's talk about Flock Homes and how you've kind of decided to help the mom and pop investors. Again, we'll use this example, 500K. Walk us through the process. So they're going to reach out to Flock Homes. They're going to have a discussion about, you're going to have a discussion about their asset. You're going to do your homework. You're going to figure out, okay, we'll buy it for, I'm going to make up a number, 450, 480, whatever it is. Then what happens?
Yeah. So I'll walk you through the quick process. And actually, you know what, Michael, can I start with the quick backstory? Because I think a lot of your listeners will find it pretty, one rental at a time. We literally started this, like, I came up with this crazy idea, the 721 exchange. Like, I had heard of it a little bit. And I was like, people would really benefit from this. Yeah. Like, why is it that it's just reserved for the ultra rich? It's a super powerful tool. Also, by the way, even if you're not ready for this, you're like, it's a good idea. Like,
right. Yeah.
But it's really hard to execute on. And when I started this business, I previously worked at a hedge fund based in Denver. And I was, I would go around and I would just be like, we're smarter than everyone else. And it was BS. Like I think the vast majority of people who are out selling you something, it's like, it's a lot of BS. Sometimes you have edge. If you know your real estate neighborhood really, really well, you can, but a lot of these syndicates, a lot of these passive, it's just BS. And the fees are egregious. And so I was like, what if we could build an investment management business, a financial product built on the premise of solving a problem for folks? Not just being like, look at me and my syndicate, we're going to be the best out there. And actually, but like really like, hey man, like let's solve a problem and help you make more money and get peace of mind and so on and so forth. So that was the genesis of this. I went off to business school. I went to Stanford. I ended up dropping out to really launch this business. But when we started, we had 0 homes. Okay. And I didn't like go out and buy 5 and then call the first landlord. I really wanted to validate this idea. And I think this is something a lot of people in your community, they know when you start one rental it starts from 0 to 1, maybe a couple of your listeners got lucky and, mommy or daddy gave them 10 or 20 to start. But most people, it's like, and a lot of our clients too, they started with nothing, literally nothing. And they built up these empires. And so I sent out a direct mail to a bunch of landlords in Denver. And I was like, this is where I lived. I knew the market well. And I was like, hey, like join Flock, like join together, own your real estate in a better way. And like, we didn't have anything. We didn't have a legal structure. I knew how to talk about a 721 exchange, but I didn't like have the legal docs yet. And this the woman, she's our first client ever. Her video is on our website. And like, incredible story, Navy vet, single mom, like just amazing. And she's like, she calls and I tell her, I pitch her, and she's like, all right, let's do it. And I'm like, but wait, I got to tell you the truth. We don't have any houses, we don't have, and she's like, all right, so go build it. Like go get them. So we got the first couple and we launched 3 years ago with 4 homes. And we finished the first year at like 45 homes, and they were all in Denver and Kansas City. And I then started hiring the team of like I knew Denver really well, but like I didn't know anything about North Carolina. So I hired a guy from a big REIT who has acquired thousands of homes there, started building the team and stuff. So fast forward today, now we're at almost 700 homes, hoping to finish the year around 800. We turn down a lot of houses. Like that's kind of the, on the one hand, I want to work with as many clients and landlords as we can. On the other hand, we don't compromise on price. Again, our goal is not to, going back to your question, our goal is not to buy these things low and sell them high. It's not the right fit for everyone. Like,
right.
I'm the first person to say, like, if you've got 80% loan to value, you bought this thing, a few months ago, like you should probably just put it on the market and sell. We're pretty skeptical of those people. Like when a flipper comes in, we're like, we're like really thoroughly we inspect every home, but like those ones we're like, do we really, So like we're very, our goal, like if it's not the right fit, we're the first ones to say it. And so going back to, in that example of how it works, someone brings us a house, it's worth $500K. Our goal, like we take a comps-based approach to underwriting. We say your house is worth $500K. We inspect the home. So the way the process works is you come online or you just call us or email, you submit your property details. We would then inspect, you learn more about our fund, our team, what homes we own. We've got a portal where you can see every single home that we own, the price on our books that we keep it at, the status, the repairs and CapEx we've done. It's extremely transparent, super cool. And so then you do your due diligence on us, and we do our due diligence on your asset. We look at, you say, hey, I replaced the roofs last year, and then we go like do the inspection and we see what is the condition of the roof. And then we come up with that final valuation. And then we can close in as little as like 15 days. And so you sign what's called a contribution agreement. It's kind of like a PSA. Mm-hmm. And at the end of the month, the asset title transfers, and you get that value. It closes just like with a regular title company. We've got a portal that does the whole thing online, 48 hours from the comfort of your couch, and boom, you get your shares in our fund. We now own the assets, we collect the rent, and you're just now a passive shareholder. You get, we do quarterly earnings calls. We've got one later this week if you or anyone else wants to join. We've got, you get every quarter, you get your cash flow. You get how much your appreciation from the overall portfolio is, right? You get your percentage appreciation from all the homes. And at the end of the year, you get a K1. It's always on time. And it says how much depreciation, lost you got allocated to, if that's applicable. So again, you get all the cash flow, all your pro rata sort of appreciation, as well as all the tax benefits.
Wow. So again, a 721 exchange, secret weapon no one's really talking about. Again, kind of playing it out for folks. You're basically exchanging active income. That's what the IRS has for landlords. It's not passive, it's active income, or it's active work. And you're moving into basically becoming a shareholder in a portfolio of properties.
Exactly. You're going to become a limited partner or a shareholder in this partnership. If you've heard of a REIT, you can kind of think of it like a REIT or UPREITs. Some of the publicly traded companies that do this, and there's a lot of REITs that do this, they're actually structured as a REIT UPREITs. Eventually, we'll probably go down that route. We don't need to now, but yeah, you sell your properties. You're now the shareholder in the partnership, and you're part of Flock. Like you're on, you'll have my phone number. You can text me whenever you want, my whole teams. And part of I'll share, like you have nothing to do with the asset anymore. Like if you put in, we actually, we close on a bunch of homes we have a lot of homes in North Carolina. And we were closing on a bunch of homes, like right when, I think it was Helene was right when the hurricane hit. And like, if one of those homes was destroyed and you put it in 2 days before, like you have nothing to do with that. It's not your you sold it. I mean, you do in the sense that you own that home alongside all 700 of these, right? But you have no more liability. A lot of people ask us like, well, why do you show all the homes? Why do I care what I don't own that? I don't own the home anymore. I just own shares in this thing. And the answer is like, another question people have is like, how do you manage these? How do you manage 7? And it's kind of a trick that we play on our team. And it's basically like, Michael, if you put in this house and this was your 3rd rental ever, and it's your life work, and maybe you even lived in that home, and like you literally the ins and out of that asset, and now it's coming into your partnership. Sure, you're hands off now, but we want to give you the ability to, whenever you want, go in there and be like, how is that home doing? Because my team knows that you can do that. And my team knows that like you've got my phone number and my email. And it's a way to just keep everyone account. And this happens. Like we have clients who literally, they're like, I drove by the lawn of this house that I put in 2 years ago and it was overgrown. And I'm like, in our leases, the lawns are responsibility of the residents, but you're right. And
we'll take care of it.
And you better believe the person on my team who was responsible for that lawn heard about it, Oh,
that's awesome, man. There's so many questions. I think Flock Homes is going to get a lot of interest. Let me just put this up here. There's an email and also a phone number. I can't believe you guys gave us a phone number. If anybody in my community wants to ask questions, and you certainly do, because there's so much more to learn here. 721 exchanges, Flock Homes. We're going to have to do conversations like this more. But you can just go send them an email at info@flockhomes.com. Or if you really want to know quick, just give them a call, 720-419-3566. Again, flockhomes.com. Look at the videos, testimonials. This could be a thing. This could be right for some of you. It's not right for everyone. It never is. But I think it's going to be right for a lot of folks. I know I will be looking at this because something Olivia and I talk about all the time is, when we get to that age, how are we going to get out of this thing? Some of these will end up going to our daughter, no doubt, but not all of them. Not all of them. So 721 exchange might be the right answer for us. Ari, any closing thoughts?
No, just, on your last point here too, I'm sure someone will ask this eventually, but it's like a big use case of the 721, it's estate planning. And so just like regular real estate, your guys' goal, obviously pass it on, or a lot of it, to your daughter. With the 721, you can still pass all your shares on to your heirs. You can actually do it more flexibly. You can, gift some over a period of time, and then they still ultimately get the step up in basis in the same way that your real estate would typically be treated. So it's truly all the benefits, without any of the burdens. The one drawback is that, unlike a 1031, this is the end of the line. So once you come in, you can't 1031 out, but that's why it truly is, the retirement solution for landlords. Last closing thought, I have a ton of respect. We've worked with hundreds of people in Flock, and many of them, they're like, I imagine many of your community today, which is either folks getting started, and like our client, they started with nothing, and then you look back 20 years later and they got 100, 200 homes. It's unbelievable. So to all the folks out there, keep up all the hard work. We'd love to be there for you at some point in your investing journey. We also work with a lot of brokers. So even if today it's not right for you, but you're a broker, we work with a lot of realtors who have clients who own portfolios like this with low tax basis. So just give us a holler. We, again, at the end of the day, we're a big landlord, just like I think a lot of your folks are. We're trying to learn. We're trying to build this. So we'd love to, get in touch with you guys and keep up all the great work.
Awesome, man. Well, I appreciate you. We're gonna do some more conversations together, because I think this is a topic that a lot of people are gonna have questions on. Again, it may not be right for you today, but it's a nice idea to know it's out there. Again, 1031 exchanges aren't the only way. There is this 721 exchange. Ari, thank you very much for your time, man. I appreciate it.
Thanks so much, Michael. Take care. Have a great show, guys.
Very cool.